Hey, welcome to another day of unlocking VA loan success. And so today we're going to get creative with VA buyers and sellers. And we're going to share a lot of really cool tools today. Certainly take notes, certainly reach out to me with any questions. And we're looking forward to you being educated in this and moving forward as a buyer, a seller, a realtor, anybody that can benefit from a VA loan. So we're going to talk about our VA buy then sell or rent. Really cool way of being able to move from one house to another and transition your family easier using seller paid concessions. And this is really creative and it's a lot more than most people think that can be done. Lower the VA funding fee. There's the full amounts for first time and subsequent use, but then we're going to show you ways that it could be from zero or less than the full amounts. Down payment assistance. This is not just for first time buyers. And I want to talk specifically about North Carolina, how one spouse can occupy or meet the occupancy requirements for VA and the other spouse doesn't have to live in the property. And it's not just for active duty. Transitioning out of the military. Someone has less than a year left in the military. We're going to show you how that can work. And then VA loan limits. There are no loan limits under certain conditions. So I want to show you that because that is a huge tool that can be used by buyers, sellers, and realtors. So let's move forward here, and we're going to start with the VA buy then sell. VA buy and sell, this is, first of all, it's not a specific program with VA. This is just what we call it. And it's basically a way that you can transfer or transition your family an easier way, meaning go ahead and buy and move into your new property and then sell or rent your current property. Another thing that's really awesome about that is we may not have to count your current mortgage payment and the debt to income ratio. Most know it's very hard to qualify with two mortgages. We only have to qualify the buyer with the new mortgage, not the old one. So we can work on that. That's a great strategy to be able to get into the house, move in, then get it sold. The other way is many run into the situation of, hey, I don't feel comfortable having two mortgages, or hey, I don't want to sell, get everything done, and then is it going to be a day or 4 months before I get under contract and be able to, you know, move into the house? Do I live on a couch with someone for a while? What if you got kids and you need to find a temporary rental? That's can be a tough thing to do. And so the other part is, well, let's offer as a contingency sale, make an offer on a house with a contingency of you having to sell yours first. And a seller's not going to like that in this market. They could, most of the time they're going to just say, no, I need a buyer that's ready to go. So this is an awesome way of having two VA loans at once. It doesn't have to be a VA loan on the existing house, but it does have to be a VA loan on the one that's being purchased. So awesome product, awesome way of having a great strategy to transition better, qualify easier. Seller pay closing costs or concessions. And most people think that it's 3 or 6% like conventional and FHA for max seller pay costs. And then some know about the 4%. VA has a 4% limit, but that's on sales concessions, not closing costs. Closing costs, VA will allow the seller to pay all customary closing costs for the area. So what does that mean? Appraisal, attorney, title insurance, lender fee up to 1%. So all these things can be paid by the seller before you get to the 4% sales concessions. So then 4% can, let's say it's $300,000 price. That's $12,000. So that can go towards first prepaids, which means first year of insurance or flood insurance or whatever insurances there are, setting up a escrow, and then any daily interest to get you to the first of the following month. The rest of it can go to a lot of cool things. That's where it can go to pay off debts to qualify, or you just want to pay them off, paying off judgments, buying out a lease early so you can move, buying appliances, getting a golf cart. There's all kinds of things. So that's where it gets just amazingly creative. And really, the bigger the loans, the kind of easier it is to get. Maybe if it's, a large price, it'd be 600,000, 900,000, something like that. And you have all the closing costs can be paid by the seller. Then you have 4% that can pay off the prepaids. And then the rest can, again, do all kinds of things. You're moving into a neighborhood, everybody has a golf cart, and you want one, have the seller pay for it. Now, so if it's a very competitive property, multiple offers and all that, probably not going to be able to do that type of thing. But this can also be a great strategy for a seller. Seller knows, hey, there's a decent chance that a veteran or someone that's in the military could buy this property. Maybe instead of reducing that price $10,000 to get activity, how about offer seller pay concessions? Pay the closing costs. Figure up, how much, talk to us as a lender. Hey, how much will the closing costs be roughly? How much will the prepaids be on this? Okay, hey, that's making it up. Say $8,000. Hey, I'll pay 15. All right. Offer 7,000. Give some examples of something, when you're marketing the house. There's a lot of ways that this can be used as a strategy for a buyer, a seller, and the realtor. Okay. And either on the buyer or sell side. It's just amazing thing that most just don't realize. So keep that in mind when figuring up qualification or just how you want to do it or moving that property. Lower VA funding fees. First of all, first time you use VA, it is a 2.15% of the loan amount funding fee. VA requires lenders collect this. It is allowed and it's customary for it to be added on top of the base loan amount. So if it's a $200,000 purchase price, the loan amount is 200,000 plus that VA funding fee. If it's subsequent use, second, third, 10th time using it, it is 3.3% of the loan amount financed on top. Now, the veteran does have the option of paying it cash, just paying it themselves and not financing it. This is not a real stat, but I'd say 99% plus of all my clients are going to finance it. It just makes sense to add it in there. So that is an option. But then there's ways of reducing that VA funding fee. So this is no money down. If someone puts down 5% of the purchase price up to less than 10%, then the funding fee drops to 1.5%. So especially if it's a subsequent use, 3.3%, and it goes down to 1.5, that can be a big difference, especially on higher priced homes. And then if you put down 10% or more, it drops to 1.25%. No amount of down payment makes it go away. But the way to not have a VA funding fee at all or be exempt from it are two things. One is it's always, or at least as long as I know, it's been allowed to waive that funding fee if you are rated by VA 10% or more disabled. So that's one way. A new way that came about in 2020, if I remember right, and that is if you're a Purple Heart recipient, then you're exempt from that funding fee. So that means you do not have it. And as we talked about in one of our earlier videos, we talked about how you can actually close, and then if you are rated or approved as VA disabled after the closing, but it's effective before the closing, you can actually get that money back. So another cool thing to know. But this right here is very helpful. And sometimes it comes into play, especially with down payment, but we always look for someone that's exempt. That's something we ask in every initial conversation because it's that important. Down payment assistance. Now I'm going to talk specifically about North Carolina, but there's down payment assistance in other states as well. First of all, you can have a first-time buyer down payment assistance, and that goes along with a VA loan. A VA loan, they should have full entitlement, so should be able to borrow 100% of the purchase price. Down payment assistance through North Carolina Housing Finance Agency is $15,000 for first-time buyers, and closing costs aren't going to be that much. So what would happen is we would apply that to all the costs, the prepaids and everything. Any that's left over can go towards paying down that first mortgage and makes it a little bit lower, saves a little bit of money. So that's really cool. Now, also, let's say that someone is not a first-time buyer and they're not in the military anymore, they're a military veteran. They do make a one-time exception where you don't have to be a first-time buyer and can use this product, the $15,000, to buy a new home. So a really cool thing that's in their guidelines that many do not realize, because most of the time you think of down payment assistance, it is first-time buyers. They also do have another down payment assistance that's 3% of the first mortgage amount, and you could be first or second-time buyer. So very useful. Occupancy from a distance. I've written several articles on this in the past. most know that, a spouse, if someone's in the military and they're maybe overseas or stationed somewhere else, the spouse can occupy the property and that satisfies VA occupancy requirements. Now, what gets tricky and what I've seen is a lot of lenders will turn this scenario down is if someone is going to occupy the house. So one spouse is going to occupy maybe the children if there are any, and then the other spouse is going to be living and working somewhere else, even out of state, across the country. And the answer usually they'll get is no, you're both not going to live in the property. That's a trailing spouse. You can't count that income and you can't get a VA loan because you both won't occupy. That is not true. So I've closed a decent amount of these. And now we have to verify everything and get a good signed explanation letter and prove certain things. And it's a longer conversation and it varies depending on the person's scenario. So, but we can actually close on a VA loan where one spouse will occupy. That satisfies the occupancy requirement. And then we need to prove the living arrangement for the other person, what kind of income they have. They haven't quit their job, a few things like that. So that's what we will go through in that process. But that can be a very helpful thing. And sometimes just, families just live and work in different areas and they go see each other once a month or something like that. It happens. So that's a very helpful thing. You won't see it every day, but it will help out. Transitioning out of the military, some point you're going to get out of the military. And so one of the first things we look at on an LES is what's that ETS date? Are they getting out of the military in less than a year or potentially getting out of the military in less than a year? And we're going to ask that as well. And so if you are getting out in less than 1 year, then that current military income cannot be counted towards your qualification. So then the next question is, do you have a job offer from another company? And now it can't be commission or self-employed or anything like that because you need a history to average that out and everything. But if you're having a salary job or an hourly job, then we may be able to count that job offer letter and use that income instead of the military income. So that is a really good way of solving that little gap that you have when you're less than a year. So again, it varies on all kinds of scenarios like that. Typically, if someone is not quite out of the military, they're not going to have their VA disability if it applies or retirement. So it's going to be big time on what's that job offer letter look like and maybe if a spouse has income. So again, another useful tool there. And then finally, I mentioned this whenever I can, VA loans have no limits. About hardly anybody knows this. And it is just, if you have full entitlement, meaning you have no existing VA loans out there or VA foreclosure short sale from the past that's tying up some entitlement, then full entitlement, you can borrow any amount, as long as you qualify, of course, credit, income, asset wise, and all that. We've recently closed over the last few months, 1,079,000, 100% financing, 1,001,000, 100% financing, 1,975,000, no money down, no PMI and no funding fee on that one. So, I mean, you just can't beat that. Jumbo loans can't touch it. You got to put down 20%, 25, things like that. So really cool. That's good for, sellers, remember veterans and realtors always ask if you're a veteran. Even someone's buying at the beach, ask if they're a veteran. They may be moving into that property or one of the spouses may be occupying it. So remember those things. So like I put here on the fourth bullet, high purchase price, no down payment, no PMI, seller paid cost, best loan in America. It's just unbelievable what you can do with all this. Have you heard me say along throughout this webinar that, realtors, be the expert, know these things. I'm putting it all out there. Of course, ask me, but if you can learn these things and you sit down with a seller and or a buyer, you're going to tell them things that no one else has told them. And they're going to go, why didn't so-and-so or these 5 other realtors I interviewed, why aren't they telling me those things? Because I educate myself and I want to make sure I give you the best information so you can make an informed decision and do everything best for your family. And so that's where a realtor can really stand out by providing education, communicating, be that resource. And then as we talked about in some prior slides or shows, know what to look for as far as property condition and things like that. But have your team together, and hopefully that includes Russell Smith, the dream team. But if you have questions, please reach out, ask me any questions you have, VA or anything else. I'm happy to help. And so next week, what we're going to talk about VA loans and credit. And that includes, what if you had a VA foreclosure before, short sale? Some think, oh my gosh, they're going to wait 7 years. Not true. Some think, oh my gosh, I had a foreclosure in VA. I can't ever use it again. Not true. You can use bonus entitlement. Student loan debt. All lending agencies have their own way of counting student loan debt. VA is different, and I will go over that. And sometimes it can really make a big difference in helping someone qualify. And then debt to income ratios. VA most of the time is very flexible in that. And so we'll talk about that as well. But that's everything. I hope that you're able to use all this information to help yourself as a buyer, seller, uh, financial advisor, realtor. But just reach out to me with any questions. And as I always say, just ask Russell. So I hope you have a very blessed day. And we look forward to sharing more with you and you being the best you can in everything that has to do with VA.